Hello, and welcome back to USA Senior News. Today we're covering something that's affecting more Americans than ever in 2026. Bank accounts being frozen, often with zero warning, over completely innocent activity. By the end of this video, you'll know exactly what triggers these freezes. A brand new law specifically affecting seniors that almost nobody is talking about, and exactly what to do if it happens to you. Let's get into it. Before we get to the specific triggers, it helps to understand why this is happening so much more in 2026 than in past years. Banks are under enormous pressure from regulators to stop fraud, identity theft, scams, and money laundering in an increasingly digital financial system. To do this, banks now rely heavily on automated, AI-driven fraud detection systems that scan every single transaction in real time, checking your spending habits, your login locations, your device activity, and your transaction timing, all looking for anything that doesn't match your normal pattern. Here's the uncomfortable truth. These systems are built to be overly cautious on purpose. Banks would rather freeze 10 legitimate transactions than let one fraudulent one slip through, because letting fraud through costs them far more than a false alarm does. That means completely innocent everyday actions, a large family gift, a vacation purchase, moving money between your own accounts, can get caught in the same net as actual fraud. And because banks are legally restricted from explaining exactly what triggered a freeze, tied to regulations around suspicious activity reporting, many customers are left confused, frustrated, and completely in the dark about why their money suddenly isn't accessible. With that context, let's break down the 3 most common things that trigger these freezes, plus a 4th one specific to seniors that just changed this year. The single most common freeze trigger is a transaction that doesn't match your normal spending history. Banks build a kind of financial fingerprint for every customer based on how much you typically spend, how often, and where. So here's a very common, very innocent scenario. You've never sent more than a few $100s at a time. Then, one day, you send several $1,000s, maybe as a wedding gift, a down payment for a grandchild, or help with a family emergency. To you, this is a generous, completely normal decision. To the bank's fraud system, it's a major deviation from your pattern, and it looks eerily similar to the way scam victims are often manipulated into wiring large, unusual sums to unfamiliar people. The same applies to sudden international purchases or transfers, especially to a country you've never sent money to before. And it applies to what banks call rapid-fire activity, several transfers, withdrawals, or deposits happening within minutes of each other, which is a pattern fraudsters commonly use when testing whether a stolen account still works. None of this means you did anything wrong. It just means your activity crossed an invisible threshold the bank system is watching for. The fix here is simple and takes about 2 minutes. Call your bank before making an unusually large transfer, an international purchase, or a big withdrawal. Tell them the amount, who it's going to, and why. This single step, informing your bank in advance, is one of the most effective ways to prevent an automatic freeze before it even happens. The second major trigger is one people tend to overlook completely. Bank letters that look routine, but are actually early warnings tied to federal identity verification rules. Banks are legally required to verify who they're dealing with under anti-fraud and anti-money laundering regulations. If something on your file doesn't match, an expired ID, a name change after a marriage or divorce, updated Social Security information, or even a recent address change combined with unusual activity, the bank may send a letter asking you to provide updated documents. Here's the problem. These letters often look like ordinary junk mail or routine paperwork, so people set them aside without responding. If you don't respond, the bank is required to restrict or freeze the account as a precautionary measure until the issue is resolved. This isn't the bank being difficult. It's the bank following a legal requirement it has no discretion over. This also applies to changes in account ownership. For example, if a spouse passes away, or a power of attorney is added, or joint ownership details change. Until the bank can clearly confirm who legally controls the funds, it may restrict access as a protective measure. The fix: open every letter from your bank, even ones that look routine, and respond promptly if it asks for updated documentation. A same-day response can prevent weeks of frozen access later. The third trigger is one that catches a lot of retirees off guard specifically: dormant account activity. If you have a secondary savings account, an old account you rarely touch, or an account you're keeping just in case, extended periods with no activity can get it classified as dormant. Banks then place restrictions on dormant accounts until you verify your identity or make a qualifying transaction. In some cases, if an account stays untouched long enough, funds can even be transferred to the state under unclaimed property laws. Then, ironically, the moment you finally do use that account, after months of silence, that sudden activity can itself look suspicious to the bank's fraud system, since it doesn't match the no-activity pattern that had become normal for that account. The fix: a small deposit or withdrawal every few months is often enough to keep an account active and prevent it from being flagged as dormant in the first place. Now here's the part of this video that's genuinely new and directly affects those of us over 60. As of January 1st, 2026, over half of U.S. states have enacted what are commonly called safe harbor laws. These laws legally allow a bank to delay or freeze a senior's transaction first and ask questions later, if the bank has reasonable cause to believe the customer may be a victim of financial exploitation, without the bank facing legal liability for that delay. To put this plainly, your bank can now hold your money for up to 14 business days if their system decides your transaction looks like it might be elder financial exploitation, even if it's completely legitimate. This is happening alongside major updates to the technical systems banks use to process transfers, which now include a specific code used to automatically pause anything that looks questionable compared to your historical spending, before the money even leaves your account. Why is this happening? Because banks were previously hesitant to stop a customer's transaction, fearing they could be sued for holding someone's money without cause. New legal protections now give bank employees and automated systems immunity when they act in good faith to prevent suspected fraud. That change has made banks far more willing and far more automated in freezing first and verifying later. The intention behind these laws is genuinely protective. They're designed to stop scammers from draining a senior's life savings through wire transfers before anyone can intervene. But the side effect is that completely legitimate transactions, a generous gift, an unusual but genuine purchase, can now get held for up to 2 weeks while it's reviewed. The best defense here is the same as trigger number 1: transparency. If you know a large or unusual transaction is coming, a wedding gift, a down payment, a big purchase, call your bank 48 hours ahead of time. Tell them the amount, the recipient, and the purpose. Building this kind of relationship with your bank, especially your local branch if you have one, makes it far less likely the system flags a generous decision as a potential scam. If you find yourself in this situation, here's exactly what to do in order. First, contact your bank immediately, using the number on the back of your card or the number listed on their official website, never a number from a text message or email you received. Confirm your identity and ask specifically which transaction or issue triggered the hold. Second, gather any documentation that supports the legitimacy of the transaction: records of where the money came from, invoices, proof of a gift, travel confirmations, anything that shows a clear, honest explanation. Third, understand the general timeline. A straightforward fraud hold or identity verification issue is often resolved within a few business days once your identity and the transaction are confirmed. However, if the freeze is tied to a legal matter, like bankruptcy, a court order, or a suspicious activity investigation, it can take significantly longer, and the bank may not legally be able to tell you exactly why. Fourth, if you feel the situation is being mishandled or is taking an unreasonable amount of time, you can file a complaint with the Consumer Financial Protection Bureau or your state's banking regulator. And finally, it's worth keeping a backup account at a separate bank if possible, so a freeze on one account doesn't completely cut off your access to funds in an emergency. Before we wrap up, one important warning. Scammers are fully aware that account freeze fears are effective, and they've built entire scam scripts around them. If you ever receive a text, email, or phone call claiming your account has been frozen or restricted, asking you to click a link, share your login details, or provide personal information to fix the problem, that is almost always a scam, not your real bank. Real banks communicate through their official secure app, your account statements, or a number printed on the back of your card, never through an unsolicited urgent message demanding immediate action. If you're ever unsure, hang up, ignore the message, and call your bank directly using the number you already have on file. To summarize, watch for large, unannounced transactions, respond promptly to any identity verification letters, keep secondary accounts lightly active, and if you're a senior making an unusual transfer, consider giving your bank a heads up first, especially with new safe harbor laws now in place in most states. A little transparency with your bank goes a long way toward avoiding a frustrating, unexpected freeze. If this video helped you, consider subscribing to USA Senior News. We cover Social Security, Medicare, banking, and retirement updates like this every week, explained simply, with no confusion and no fluff. Stay informed, stay protected, and we'll see you in the next video.